you talk about how Asian investors that do want to get into some of these big tech names, and after seeing a session like we saw in the U.S., I'm just wondering, what's the message to clients this morning?
Well, the message to clients should be to invest for the long term. But it does seem like we have a lot of short-term traders in the market at the moment, and those would be considered weak hands by me. So yeah, you have seen some of a shakeout from those investors that have just been getting used in 2020 and 2021 to almost everyday gains, and now they're seeing the volatility, and some of them can't stand that, so they get shaken out.
And do you think that the January that we had in February, are we likely to see more of this adjustment where yields continue to tick higher across bond markets, and you're going to see the likes of growth stocks continue to see more pain?
Yeah, well, we're looking for that valuation support in some of the stocks, and you will get that in some of the very large household names also here in Hong Kong. But for many of those others profitless companies, I think there is more pain to go, because indeed it is our base case scenario that there will be a modest continuation of rises in bond yields. God forbid that they go too far up, because in that case, markets would really be in trouble. But to see US bond yields rise a bit further over 2% would probably just lead to a further rotation towards more value stocks in the market that are basically more short duration, as you may call it.
Okay, and just in terms of the valuation dispersion that you mentioned there, I understand you are still underweight equities, mostly this part of the world, Hong Kong and China, and you're still looking at developed markets, which, by the way, have really outperformed drastically these last 24 months or so. What would make you change your mind? What do you need to see?
Yeah, it's not that I'm bearish on Asia. I'm just still fairly cautious on China, but we can talk more about that. You may have heard me before. I remain quite bullish on Japan, where that's the market where there's the least of inflation problems for now, and where monetary policy remains very easy. So that one in Asia still stands out to me, but indeed that would fall under the developed markets according to that definition. So, and that's also the case for the US and Europe, where we see a lot of earnings support. And I think that is key to where we would put our money, is where we see the most earnings support. And that's something I see more in Japan than I would see in China.
And since you mentioned it, could you elaborate a little bit more on your ideas around China? Why and why not?
Yeah, so there does seem to be a bit of a sentiment issue now that may have started because of the property intervention, or, well, the lack of funding for the property sector. So that whole underlying belief in China that actually my wealth is slowly but surely growing because I own 1, 2, 3, 4, 5 properties, that is a bit crumbling now in China. And that is also putting a big dampener on consumer sentiment, especially for the rich, of course, who do own those properties. And I think that is an issue that we will still have to solve in China, that consumer sentiment is quite weak. And the property crisis is not exactly under control yet. There's still a lot of bankruptcies coming probably towards us. And finally, and we see that at the Olympics, of course, that COVID thing in China is also still far from over. And the risk there, to me, that they would actually further hamper growth by putting up a lot of restrictions from time to time on different cities, etc. And people are getting very tired of it, but it does mean that, consumer spending will also be under pressure. So those factors combined would indicate to me that earnings in China will probably not shape up very well, particularly for those consumer or facing companies.
So do you think that there's a lot of people that are, saying maybe, the rotation out of China into ASEAN, for example? We saw a little bit of that last year. You're starting to look at ASEAN a little bit more constructively too.
Yeah, indeed, and that's also around COVID essentially, because there, to put it bluntly, everybody's had it. and they're sort of immune through natural causes rather than through vaccinations. So they can breathe more easily, although they will still see lots of cases, but they won't be scared about it. And therefore, indeed, we focus on countries like Indonesia, and slowly but surely also on the Philippines, although I'm still a bit worried about the currency there. But we do see there that consumer sentiment is starting to pick up, and that's going to be a big help. And we'll see investments also starting to take hold again. So those markets have been really derated
Arnold, thank you so
over
much.
the last couple of years.